Hello to you. I'm here with Andrew Elley from Mortgage for Business. Andrew, introduce yourself. Tell us what you do.
Thank you, Peter. Well, my name is Andy Elley. I'm head of commercial mortgages at Mortgages for Business, long established brokerage. Some of you may know us. I've been in the finance business since the mid '90s, and coming on for 18 years as a commercial broker. I worked at NatWest for a number of years, so we've seen everything. Specialities are in the commercial sector. Owner occupiers, so hotels, pubs, restaurants, that type of business.
Yeah, and what we've done is we put a section up on our website, and if I'm very clever, I can actually show people what it is. So that's there, and what I'll do is I'll put something up in a minute to show people how to get to that. But I mean, interested to talk around that really, particularly the coronavirus business interruption loan schemes. Now, what do you call it? SIBLs or something, don't you call it? So
yeah, the terminology is CBILS, Corona Interruption
right.
Business Loans.
Yeah.
It was set up around about the 23rd of March. It was mainly for businesses that had been severely impacted by the coronavirus, and the applications generally went through the client's high street lenders.
Right. And how's it working to your knowledge?
I'd say the first 6 and 7 weeks of the Corona Interruption Loan Scheme has been an absolute nightmare for the lenders. The reason why is because the lenders were assessing the cases based on projections, based on historic financial accounts, cash flow forecast. In other words, they needed the whole shooting match before they could make the presentation through to their credit board.
Yeah.
And subsequently, the speed of the loans just coming out to business operators when they really needed them was just so slow.
Yeah. Yeah, because now we've got this bounce back loan. So how does that differ?
Well, the bounce back loan, is finally what small firms needed to actually get their loans in place. It's a very, very straightforward process. There's probably around about 20 questions. It can be it's based on the business's turnover from 2019. 20 questions online, takes about 10 minutes to complete, and then the funds are in the client's bank accounts within sort of 24 hours. One of my Barclays contacts said to me, it's basically a self-certification loan. The interest rate is 2.5%, which is very low.
Yeah.
There's no payments to be made for 12 months or capital to be repaid, and the interest is not accumulated. So there's been an awful lot of loans that have gone through. Barclays mentioned to me just this morning, actually, that in the 7 or 8 working days that this scheme has operated, they've written 77,000 loans.
Yeah.
£2.36 billion.
Yeah. That's just one bank.
Yeah, and that's just one bank, absolutely. So I worked it out earlier. The average interruption, the average bounce back loan is looking at around about the 30,000 figure. Very easy to get your hands on, and it will be a saviour for businesses, Peter.
And what happens if I take a £30,000 loan as a business? What happens in 12 months' time?
Well, in 12 months' time, you'll have to start making the repayments on those.
Right.
I expect that some businesses, will have issues making those payments.
Yeah.
The loan is 100% guaranteed by the government.
Yeah.
The loan has to be repaid. What you'll find is that some of the business clients, if they're struggling trying to make those loan repayments, they may have to go back to their business bank and maybe take on a longer term loan in order that the bounce back loan can be actually refinanced.
Yeah. Yeah. And if I've gone for the original one, the interruption loan scheme, and if I'm being processed on that, can I stop that and then just go for a bounce back? Would that cause problems?
Yes, you can. You can stop that process and go for a bounce back. The funds would come through a lot quicker. In
Yeah.
fact, I do believe that the Sybil's loans can actually be refinanced by using bounce back, so long as the monies on the bounce back loans are to repay the Corona interruption business loans.
Yes, got you. So you can't have both. And I understand that the bounce back is between £2,000 and £50,000.
That's absolutely spot on, between 2 and 50,000.
Yeah.
The high street lenders, they're going back over a lot of their old applications that were maybe declined because the high street banks didn't have enough financial information or they couldn't sanction the facility. And they're going back to those clients and saying, apply for the bounce back loan. You will get that in record time.
Right. Yeah, and I should think that's an absolute godsend for some people. And how do you apply for a bounce back?
It's just online, just through through your online banking or even your mobile phone app. I had a very interesting conversation with one of my colleagues last night, actually. He helped his father-in-law apply for a bounce back loan scheme. His father-in-law was a sweet distributor with turnover of around about £200,000. Obviously not allowed to go into retailers now, so his sales have slowed. Now that was put in place, and Paul said to me that his father-in-law got the monies through in 24 hours. They got £40,000 through.
Yeah.
And he did mention he could have had £50,000 like that with no problem at all.
Yes, I mean the danger of all this causes is that people lose sight of it. One day they're going to pay it back. So
absolutely, and I think when you look back on the old Sybil's loans that were when the lenders were trying to sort of calculate repayment, the debt serviceability for some of these larger Sybil's loans, to make repayments over 5 and 6 years for a few £100,000, it was impacting heavily on people's cash flows.
Yeah, and I'm just going to put our screen back up again. So let me just so on our screen here we've talked about some of them, but here we've got the job retention screen, which is straightforward, where a company is going to furlough some of their staff and they just make an application there, and that one seems to be working okay, doesn't it? It's been extended. Have you had anything to do with that at all?
Yeah, it's been extended until October, I believe, but with the main part of the scheme being extended to July. So I think that the issue with the furlough scheme, if it had been cut off at the end of June, there may have been a lot more companies having to make redundancies. But by extension till October, it gives the businesses, a lot more time to think about their staffing that they're going to need in the future.
Yeah.
And as the Chancellor said, it's been, he'll do whatever it takes. And in fairness, he has, because it's not just the furlough scheme that they've put in place. There's been small business grants.
Well, that's that one there, which is up to £10,000.
Yeah, I think 10,000. I had a note here of grants up to 25,000. VAT deferments. We've also had.
Well, let me just stick with the small business grant for a moment. It's just worth saying to people that is actually a grant, not a loan. So if they can get it,
that's actually a grant.
Yes,
yeah,
so well worth going for that one. Sorry, you said about VAT. Go on, sorry.
Yeah, I think you can defer. I think the VAT deferments could have been for a quarter or so, or 6 months, which is obviously a help. The furlough scheme, there's big payments of corporation tax and business taxes. They can be deferred for time. So, the Chancellor, they've done everything that they can, and hopefully that gives a chance for businesses to recover. Because if you look, I deal a lot in the hospitality sector in hotels and restaurants and pubs. Now that industry, is going to be particularly hard hit, and we just really don't know when they're going to be able to open and trade again. My gut feeling with the leisure sector is that they're probably going to have to open with reduced capacity, reduced covers, and it may well be that the leisure businesses, they might have to put up their costs for their food, because if they can only got capacity of 2/3, prices will go up. but I'm sure people will want to be getting out there to try. You know, they've had enough of lockdown. They'll pay an extra third for their meals.
Well, I mean, in terms of hospitality, there was a bit on the television the other day basically saying that it's not just about going out and eating, it's going out and actually doing social interaction. If you can't do that social interaction, it's a bit difficult, isn't it? So,
Absolutely, I mean, of course it is.
I mean, the interesting thing to realise from here is that many of our landlords can't actually get any of these because quite a few of them are not businesses, and a lot of them are not self-employed. And there is, in fact, a self-employed scheme as well.
Sure.
Which is there, and there is a if people go onto the website, and I'll put the website address up at the end, then there's in fact, again, let's just put it back up again, because this is where it all goes horribly wrong now if I try and do something very clever. So this is back on the website, and there is an online tool, and please work, looks like it's going to try, where basically someone will put their right, there you go, they put their unique number in there online, and it will tell them whether or not they can take advantage of that.
Fantastic.
Yeah, I mean, the point is that there, what we're finding is that many landlords don't put themselves down as being self-employed, so therefore they can't get that. But what we're trying to say to people is, if you've got a tenant who's saying to you, I've got no money, well, the landlord needs to be saying to the tenant, there are a variety of schemes that either you or your employer can use to get some money. You need to be doing something, not just sitting there with your arms folded saying, I can get no money. So
absolutely. And the lenders, I think, Peter, as well, the lenders have put in place, if tenants aren't paying, that they can do sort of, deferments on their interest payments. And I think one key point with that, I think, is, landlords have to think very carefully whether they go for that, especially if they're looking to raise money for new property purchases in the future, because that could be impacted. So you could look at it with the bounce back loan scheme. For example, if they were a limited company, they could make a bounce back loan application scheme through the bounce back scheme, instead of having payment holidays, and then their plans for future purchases then might not be interrupted by the lenders.
Yes, we had a conversation with Jenny yesterday from Mortgage for Business about that kind of thing, and the warning was exactly as you're saying, which is if you're taking a mortgage holiday, be very, very careful, because it might come back and bite you. And then, right, thank you for all of that, Andy. All interesting stuff. I have no doubts whatsoever we'll be going on to another video. So see you in the next video.
Absolutely. Yeah. Speak to you.